We're jumping straight into AST SpaceMobile today. Everyone is watching the price action. But the real story is the transition from a speculative science project to a fully operational industrial enterprise. I
Hmm.
mean, we are talking about a stock that is up significantly year to date.
It's had a huge run.
Something like 62% higher as of mid-February 2026, trading in that $82 range.
Yeah.
But if you're just looking at the chart, you are missing the forest for the trees. The whole narrative here isn't just momentum, it's about an imminent inflection point.
Right.
This is a company attempting to do what many people, well, what they explicitly said was impossible.
Completely impossible.
To connect standard off-the-shelf smartphones directly to satellites without any special hardware, no clunky terminals, just the phone in your pocket.
Exactly. You're tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get too deep into the weeds, just take a second to subscribe and hit the like button. We're here every week simplifying the market for you, so make sure you don't miss out.
Okay, let's actually dig into that.
Yeah.
Because that phrase, connecting standard smartphones to satellites, it gets thrown around a lot.
It does.
But we've had satellite phones for decades. We have Starlink. Why is this such a big deal? What makes this an inflection point?
That's a fair question. And I think the distinction is just massive. It comes down to one word. Friction. Friction.
Yeah. Think about the old satellite experience. If you wanted satellite internet, what did you actually have to do?
You had to buy a special device. A brick phone from the 90s with a huge antenna.
Right. Or you needed a Starlink dish. You had to buy it, climb on your roof, mount it, drill a hole in your wall. It's a whole thing.
It's hardware dependent. You have to buy into their ecosystem physically.
Precisely. AST SpaceMobile is trying to remove that hardware variable completely. They call it direct-to-device.
And the device is just the iPhone or the Android that's already in your pocket. That's it. No new apps, no special chips, no dishes. Your phone just thinks the satellite is a really, really tall cell tower.
That sounds great.
Yeah.
I mean, on paper. But how is that physically possible?
Well, it's the thing.
Cell phones have these tiny, weak antennas designed to talk to a tower a few miles away, tops. You're talking about hitting a target moving 17,000 miles per hour? The physics just seems stretched.
And that is exactly why, for the last 5 years, half of Wall Street called this a science project.
Right.
Because the physics are incredibly difficult. To make a standard phone hear a satellite and, talk back without draining the battery in 3 seconds, you need an unbelievably powerful antenna in space.
So not a normal satellite, not the size of a washing machine.
No, we are talking about phased arrays.
Okay, break that down for us. What's a phased array?
Think of it like a massive unfolding structure in space. It's like a giant ear and a giant microphone all in one.
So they fold up like origami to fit in the rocket.
Yeah, exactly. It's a tight squeeze. Then, once they get to orbit, they unfurl into these huge flat arrays.
And the bigger the array, the fainter the signal it can pick up.
That's it. It's like having a telescope with a massive lens. You can see dimmer stars. In this case, they can hear the whisper of a cell phone from space.
So they're compensating for the weak phone on the ground by building a gigantic, hypersensitive antenna in space.
That is the core concept. And this brings us right to the first pillar of the bull case today.
The transition from theory to reality.
Exactly. For years, this was just engineers in a lab running simulations, hoping the math worked out. But in late January 2026, we saw the proof. In orbit.
You're talking about Bluebird 6.
I am. The unfolding of Bluebird 6 was a massive de-risking event.
This wasn't a simulation.
No, this was their commercial design, the Block 2 satellite successfully unfolding in space. If that had failed, if a hinge got stuck.
It's just a very expensive piece of space junk.
But it worked, and that validates the can they build it question.
It does. It validates that the largest commercial communications array in low Earth orbit actually works. Now, the question isn't, is the physics real? It's how fast can we manufacture these?
Which is that shift to an operational industrial enterprise. They aren't experimenting now. They're building a factory.
Okay, tech works. Let's talk market size. You mentioned removing friction. So if I don't need a dish, that opens up the customer base, but how big are we talking?
The total addressable market, the TAM, it's just staggering.
Because the barrier to entry is gone.
Right. Their potential customer base is effectively every single person on Earth with a mobile subscription. They are targeting a global market of 5.8 billion unique mobile subscribers.
5.8 billion.
Yeah.
That's almost everyone.
It is, and you compare that to the competition. Starlink is incredible technology, don't get me wrong.
Sure.
But to get a new Starlink customer, you have to convince them to spend $500 on a kit and over $100 a month for service.
Whereas AST SpaceMobile just needs a carrier like AT&T to send a text, hey, want satellite coverage for an extra $5 a month?
The friction is almost zero. It's an upsell, not a whole new product. That's a huge, huge distinction.
And the competitive landscape,
Yeah,
it really is shaping up to be a duopoly.
it seems that way.
You have AST SpaceMobile with this huge head start in direct-to-device. Starlink is looking at it too, but they have different regulatory hurdles. And then Amazon's Project Kuiper is still in the early phases.
So right now, AST SpaceMobile isn't just in the market. They are basically defining it, along with SpaceX.
Okay, I buy the tech, I buy the market size, but let's talk cold, hard cash.
Right.
Because an addressable market doesn't pay the bills. Do they have actual customers paying actual dollars today?
They do, and this is where the industrial label really starts to stick. They've secured over $1 billion in aggregate commitments.
$1 billion.
And I want to highlight one specific deal here. They signed a 10-year agreement with CC Group.
The Saudi telecom giant.
Correct, for coverage in the Middle East and North Africa. But here's the kicker. That deal included a $175 million prepayment.
Wait, a prepayment? That seems incredibly rare in the telecom world.
It is. Usually you pay for the service once the network is actually live.
It just shows you how desperate the carriers are to solve this coverage gap problem.
Yeah.
ICA was willing to hand over $175 million in cash up front just to secure their spot.
That's cash on the books, not just a promise. It tells you the demand is real.
And it's not just fissure. We see the logos, AT&T, Verizon, Vodafone.
The heavy hitters, they have definitive commercial agreements with AT&T and Verizon here in the U.S. and Vodafone globally. This creates something called revenue lock-in.
Explain that. Why is revenue lock-in safer than just selling directly to customers?
Because AT&T and Verizon are going to do the selling for them, they'll bundle this into their premium plans. So once a customer gets used to having signal everywhere in the mountains at sea, they're not going to want to switch to a carrier that doesn't have it.
It creates high switching costs. If you leave AT&T, you lose your space signal.
And that makes AST SpaceMobile essential to the carriers. Basically turns AST into a utility.
Okay, so the revenue engine is primed. But building that engine, building a whole constellation of satellites is not cheap. What does their bank account look like? Are they going to run out of money?
Well, they've built quite a war chest. As of Q3 2025, they were holding approximately $3.2 billion in cash and liquidity.
$3.2 billion. Is that enough in space terms?
It's a significant buffer.
Yeah.
It mitigates the single biggest risk in the space sector, which is just that capital intensity. That cash pile tells the market, we have the runway to get to the finish line. They're not going to go begging for money next week just to keep the lights on.
Okay, so that's the sunny side of the street. Tech, partners, cash. But this is the easy money show, so we have to look at the whole picture, warts and all.
Looking at the flip side, there are definitely some storm clouds we need to navigate. This is still a high-risk play.
Let's talk about execution risk. Having a design is one thing. Getting dozens of these into orbit, that feels like a logistical nightmare.
It is a massive logistical hurdle. The entire bull case, that whole story of revenue flowing in 2027, it rests on one specific goal.
Getting 45 to 60 satellites in orbit by the end of 2026.
45 to 60 in less than a year. The math on that sounds aggressive.
It requires a launch cadence of one satellite every 1 to 2 months, consistently.
That is incredibly fast for a company just starting mass production. And it's not just about them building it.
Right, they have to get them on a rocket. And rockets, they don't always go up on time.
Exactly. They're dependent on launch providers like SpaceX or Blue Origin. If a rocket is grounded for weather or a tech glitch, AST just sits there.
Any delay pushes that continuous service coverage timeline to the right.
And continuous coverage is the key phrase, isn't it? Why is that so important?
Because it triggers the payments. It's a binary risk. If they don't get those 45 to 60 satellites up, they don't achieve continuous coverage in the US, Europe, and Japan.
And continuous means signal 24/7.
Right. If they only get half the satellites up, you might have signal for 10 minutes, then silence for 10 minutes.
And AT&T can't sell a service that only works half the time. Customers would riot.
Correct. The carriers won't turn on the billing fully until the service is reliable. So any slip pushes that revenue stream out of 2027 and into 2028.
Yeah.
And that burns more cash.
Speaking of cash, let's address the elephant in the room, the recent capital raise. Around February 17th, they announced a $1 billion convertible senior notes offering. The market got a little jittery.
It did. Anytime you hear offering, investors immediately think dilution.
Can you just explain convertible senior notes really simply? Why does that hurt the stock price?
Sure, it's basically a loan that can be turned into stock later. The reason the stock often drops is because the big hedge funds who buy these notes, they often short sell the stock at the same time to hedge their bet.
So it's just mechanical selling pressure.
Exactly. But you have to look at the nuance. The offering was fully subscribed. Institutional investors were lining up to buy this debt. They wanted exposure.
So the smart money was buying in.
Correct. They raised the cash to make sure they can hit that aggressive launch schedule. But still, not every analyst is sold on this dream. We saw B. Riley Securities came out with a pretty lukewarm take.
Right. They maintain a neutral stance, lowered their price target to $95.
And they aren't alone. If you look across the board, only about a third of the analysts covering them have a firmly positive rating.
Only a third? That's surprisingly low for a stock up this much. Why the hesitation?
It tells you the skepticism is still very real. The analysts who are on the fence are pricing in that execution risk. They're looking at that launch schedule and saying, we'll believe it when we see it.
So this isn't a slam dunk consensus trade. It's still a battleground stock.
Which, honestly, often makes for the best opportunities. If everyone agreed it was a winner, the stock would already be priced for it.
Okay, so for the listeners, let's build a calendar. What should they be watching for the next few months? Immediate catalysts.
We have a very busy calendar. In the immediate term, the next 30 to 90 days, all eyes are on the launch pad. Late February 2026, we're watching for the Bluebird 7 launch.
And that's with Blue Origin, Jeff Bezos' company.
Correct, on the New Glenn rocket, and that is crucial.
Why does the specific rocket matter so much?
It proves they aren't just dependent on SpaceX. Right now, Elon Musk controls most of the launch capacity.
Ah.
By validating Blue Origin, AST de-risks their supply chain. If SpaceX has a delay or prioritizes Starlink, AST has a backup. It gives them leverage.
Smart. You don't want to rely on your biggest competitor for a ride to work. And then March gets even crazier.
March is the sprint. The target is to have 5 satellite launches by the end of March.
Yep.
Think of it as the proof of life for that schedule. If they hit 5 launches by the end of Q1, it silences a lot of the critics.
So if we get to April and those birds are in the sky, the bear case gets a lot weaker. And looking further out.
The big commercial milestone is Verizon. Sometime in 2026, we expect an announcement about their direct-to-device service availability.
And what does that look like?
It's the moment a regular Verizon customer can actually send a text via satellite. When real people start tweeting, "I just sent this from the middle of the ocean," that is massive public validation. It becomes tangible.
And it all leads back to that magic number for continuous coverage.
Right. The year-end goal of 45 to 60 satellites. That's the North Star. If they hit that, they turn on the revenue tap in 2027.
And the analysts who do believe see a lot of room to run. Deutsche Bank raised their target recently.
They did, bumped it to $137. From that mid-Feb level, that's roughly 18% upside. And they specifically cited that launch manifest as the key driver.
Okay, so let's zoom out. Let's wrap this up with the lowdown. It feels like we're looking at a 12 to 18-month catalyst-driven trade here.
That's the right time frame. This isn't set it and forget it yet.
Yeah.
You're trading the execution phase. You are betting on their ability to build and launch.
And the asymmetry seems pretty clear.
It is. If they hit the launch targets, the stock re-rates significantly higher up towards that Deutsche Bank level. The risk premium just evaporates.
And if they stumble?
Well, it's going to be bumpy. Delays mean burning cash. But, and this is key, they have that $3.2 billion cash pile and the contracts to cushion the blow.
So it's not going to zero overnight?
No, but it could get ugly if deadlines are missed and sentiment sours. A classic execution play. The technology risk is largely gone. Now it's purely about industrial scaling.
So here's the final thought to chew on. They have the cash. They have the contracts with the biggest carriers in the world. They have the tech that actually works on your phone. The only thing left is to put the birds in the sky. So for the next 6 months, don't watch the stock price. Watch the launch pad. If those rockets go up on time, the stock will take care of itself.
Couldn't have said it better myself. It's going to be an exciting year for space.
That's the lowdown on AST's SpaceMobile. Thanks for tuning in to the Easy Money Show. Keep your eyes on the stars, and we'll see you next time.